Picture this. You're scrolling through your phone and you see yet another investing video. Someone talking about putting away $1,000 per month, building a six-figure portfolio, maxing out their Roth IRA. And you're sitting there thinking, that's great for them, but I don't have $1,000 per month. I barely have anything left over after bills. And here's where most people stop. They hear a number that feels out of reach, and they conclude that investing isn't for them yet, that they need to wait until they're in a better financial position, until things calm down, until there's more room. But what if the number wasn't $1,000 per month? What if it was $1 per day, $30 per month, the cost of one fast food meal, one streaming service, one impulse purchase you wouldn't even remember making? What actually happens if you invest $1 every single day, consistently, automatically, without stopping, for years and decades? The answer is more surprising than most people expect, and the real lesson hiding inside that answer is worth far more than the dollars themselves. My name is Jack. If you've ever told yourself you don't have enough to start investing, this video is specifically for you. Hit the subscribe button and give this video a thumbs up if this helps you out. Let's run the numbers honestly. Part 1. The actual math of $1 per day. $1 per day is $365 per year. That's the starting point. Not impressive on its own. But let's see what happens when time and compound growth get involved. Assume you invest $365 per year, roughly $30 per month, into a broad market index fund, earning a historical average return of 7% annually after inflation. Conservative. Real. What the S&P 500 has delivered on average over long periods when adjusted for inflation. After 10 years, $365 per year at 7%, you have approximately $5,050. You contributed $3,650 of your own money. The market added roughly $1,400 on top. After 20 years, you have approximately $15,100. You contributed $7,300. The market added nearly $7,800. For the first time, the growth is approaching what you put in. After 30 years, you have approximately $36,800. You contributed $10,950. The market added nearly $26,000. Now the growth is more than double what you contributed. After 40 years, you have approximately $80,000. You contributed $14,600. The market added over $65,000. You more than quintupled your money from $1 per day. $80,000 from $1 per day. That is not life-changing wealth by itself. But here is the critical insight buried inside that number, and this is the part most people miss entirely. Part 2. The real lesson has nothing to do with $1. The point of investing $1 per day is not to retire on $80,000. The point is what happens to you, psychologically, behaviorally, financially, when you become someone who invests consistently regardless of the amount. Research from behavioral finance, specifically from studies done at Harvard Business School on savings behavior, found that the single strongest predictor of long-term wealth accumulation is not income level, not investment selection, not market timing. It is savings consistency. People who save small amounts consistently over long periods dramatically outperform people who save larger amounts sporadically. The habit matters more than the number. When you start investing $1 per day, you are not just moving $30 into a brokerage account. You are doing something far more valuable. You are training your financial identity. You are becoming someone who invests. And that identity shift from someone who is going to invest someday to someone who invests right now changes every financial decision that follows. Because here is what actually happens after people start with $1 per day. They see the account. They watch it grow, slowly at first, almost imperceptibly, and something happens in their brain. The account becomes real. The habit becomes normal, and when their income increases, a raise, a bonus, a side income, their first instinct is no longer to spend the extra. It is to invest more. The person who starts at $1 per day rarely stays at $1 per day. They move to $3, then $5, then $10, not because someone told them to, because the habit is already built, and scaling it feels natural. Part 3. What $1 per day becomes when you scale it. Let's run the math on what happens when the $1 per day habit becomes $5 per day, $150 per month, which is an amount most people can reach within a year or two of starting. At $5 per day, invested at 7% annually over 40 years, you have approximately $400,000 from $5 per day, less than the cost of a daily coffee at most cafes, and $10 per day, $300 per month, over 40 years at 7% becomes approximately $800,000, nearly $1 million from $10 per day. This is the compounding ladder. You start at the bottom rung with whatever you have. The habit builds, the income grows, the contribution scales, and time, the one ingredient that cannot be bought or borrowed, does the rest. Research from Vanguard's annual How America Saves report found that investors who started with small automatic contributions and increased them by even 1% per year consistently ended up with portfolios that were 40 to 50% larger than investors who waited until they felt they had enough to invest meaningfully. Waiting for the right amount cost more than starting small. Part 4. Where does the $1 per day actually go? Let's talk about the practical mechanics, because this is where most beginners get confused and stop before they start. A broad market index fund is the right vehicle for this money, specifically something like a total U.S. stock market index fund or an S&P 500 index fund. These funds give you instant diversification across hundreds or thousands of companies, low fees, some as low as 0.03% annually, and historical returns that have beaten the vast majority of professional money managers over long periods. Many major brokerages now allow fractional share investing, meaning you can buy a partial share of a fund with whatever amount you have. You don't need to wait until you have enough for a full share. $30 buys you a fraction of whatever fund you choose. You are invested from day one. The account that holds this investment matters too. For most people, a Roth IRA is the optimal starting point. You contribute after-tax dollars. The money grows completely tax-free, and when you withdraw in retirement, you pay zero taxes on any of it, including all of the growth. On $80,000 grown from $1 per day, that tax-free status saves you potentially $15,000 to $20,000 in taxes depending on your bracket. If your employer offers a 401k with a match, that comes first. Always. The employer match is a 50 to 100% instant return on your contribution. No investment on earth competes with that. Capture the full match before opening anything else. For someone with no employer match, a Roth IRA at Fidelity, Vanguard, or Schwab. Open online in 15 minutes. Fund it with $30. Buy one index fund. Set up a monthly automatic contribution. Done. You are now an investor. Part 5. The psychological traps to avoid. Here's where most people who start small go wrong. They watch the account for the first few months, see it growing by cents and small dollars, and conclude that it isn't working, that the amounts are too small to matter, that they should wait until they have more before continuing. This is the most expensive mistake in investing, not because of the $1 or $30 or even $100 they stop contributing, but because of the compound growth that would have accumulated on those contributions over the decades that follow. Behavioral economists call this present bias, the tendency to overweight what we can see right now versus what we cannot yet see in the future. $30 invested today feels meaningless because the $80,000 it becomes in 40 years is invisible, so people stop. And the clock, the one ingredient compounding needs more than anything, stops with them. The solution is simple but requires discipline. Do not watch the account daily. Set up the automatic contribution, then check quarterly at most. Give the compounding time to become visible, because the growth that feels imperceptible in years 1 through 5 becomes genuinely exciting in years 10 through 15, and extraordinary in years 20 through 40, but only if you stayed in. The other trap is waiting for the perfect time to start. Every year, there is a reason the market feels risky, too high, too volatile, too uncertain. Election year, interest rates, geopolitical tension. There has never been a period in modern market history where investing felt obviously safe and comfortable. The people who built wealth invested anyway. They did not wait for certainty. They accepted uncertainty as the price of admission. Part 6. What $1 per day really proves. Here is the honest truth about the $1 per day exercise. It is not an investment strategy. It is a proof of concept. It proves that the barrier to starting is not money. Anyone reading this has $1 per day. Anyone. The barrier is the belief that small amounts don't count, that you need to wait for a real number, that investing is for people who already have money. None of that is true, and the math we walked through today proves it isn't true. The $1 per day becomes $5 per day. The $5 becomes $10. The $10 becomes $300 per month. The $300 per month becomes $800,000 over a working life, and the $800,000 becomes financial security, options, and the ability to stop working when you choose, rather than when you have no choice. It all starts with a number so small it feels almost embarrassing to talk about. But embarrassingly small is infinitely better than zero. And zero is what you have if you keep waiting. So here is your challenge. Today, not next week. Not when things settle down. Today, open a brokerage account if you don't have one. Fund it with $30. Buy one broad market index fund. Set up an automatic monthly contribution of $30. And then go live your life and let the math do what the math does. $30 per month. $1 per day. The price of nothing you would miss. The price of everything you're trying to build. If this video changed how you think about starting small, hit the subscribe button, give this a thumbs up, and comment below. What's the smallest amount you could start investing today, right now, without it affecting your life at all? I want to know, because that number, whatever it is your starting line.